Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective to try to understand where we have the highest probabilities of the next potential move. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video to the end, and I will see you on the charts. In today's video, I want to speak about Euro CHF because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can see is that the market is currently breaking above the previous high. From here, the market had created this move to the downside. At the moment, the market is rejecting it to the upside, breaking above this previous support, which at this point acted again as support. And since this area was previous resistance, if we get a successful close above this area, which is what we're getting in about 15 minutes, at that point, this previous monthly resistance would be turned support. So what we could expect here is a retest of previous resistance turned support and then a rejection higher. So what we expect, at least by looking at the monthly, is short-term bearish price action and then longer-term bullish continuation. Now, if we drop down on the weekly, what do we see? Now, from a weekly perspective, the market seems very overextended to the upside and in need of a correction. So since we have an impulse, if we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse, giving us a 0.32 and 50% Fibonacci retracements, currently lining up at this area, which is also pretty close to the previous resistance turn support, creating a confluence of support that there is the possibility that the market will go and test. But overall, the same directional bias applies than what we have already seen on the monthly, so a bit of short-term bearish price action and then a longer-term bullish continuation. Dropping down the daily time frame, what do we see? Now, from a daily perspective, things start getting quite interesting because if we follow the pattern here, we had the impulse correction, the market tried going higher, then failed, and at the moment, it seems at least like the market could create this move to the downside. Now, if that will be the case, if the market from here will actually create this move to the downside, at that point, we would have the creation of an M pattern, after which we could expect a potential rejection to the upside and completion of the pattern at the neckline, which is previous support turn resistance. So if we do get this rejection to the downside, creating this M pattern, at that point, we could expect a potential reversal and completion of the pattern at the neckline, which is this area here, which is previous support to resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data on the euro, we can see how with the last reports, we went from having a negative net positioning of minus 47k net positions with 249k longs and 249k shorts and 202k longs, all the way up to having now 226k longs and only 151k shorts. So the euro is actually getting very bullish from an institutional perspective. And on the CHF, what we're seeing is net positioning continuing to decrease from minus 5k to minus 11.3k, with 2.7k shorts added to the last report and 1.5k longs getting closed. So the CHF is getting bearish and the euro is getting strong. And that is exactly what we need if this M pattern will be created for the market to create a rejection to the upside. We will need strong euro and weak CHF. So if the market does create this move to the downside, there is definitely a possibility for a potential rejection to the upside and completion of the M pattern at the neckline. So if we do get this move, how we could be approaching this rejection higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. So what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection higher and completion of the M pattern at the neckline. Now, if you don't know what I'm speaking about, when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, you will see that at the moment I'm running a special promotion in which, since I have partnered with the Forex broker Blueberry Markets, if you join from the website, this one here, and then you open an account with them directly from the student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that from here you have the possibility to join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does help with the YouTube algorithm, and I will see you in my next video.